Hello and welcome to the Every Quarter broadcast. This is episode number 20 and the date is 21st January 2024. In this video, I'm going to share with you what I'm calling a pragmatic and practical comparison between the December 2023 and the January 2023 GRZN bond auctions. In the last few days, I think following the bond auction results for the January 2024 auction, I've seen a number of commentators online, especially on Facebook, try to make a comparison between the December auction and the January auction and trying to draw conclusions as to which bond issuing method is better between the method that was used in the December auction, which is the discount method, and the method that was used in the January auction, the new method, the par value method. And I'm not very happy with the conclusions that they are arriving at, principally because the way they are comparing the two bonds auctions, it's not correct. The way the comparison is being done, it's very incorrect, and therefore it's not surprising to me that they are arriving at two different at conclusions that are wrong. Okay, so I decided that I should do a video to show you guys a pragmatic and practical approach to comparing these two bonds, an approach that makes sense and an approach that that leads to better conclusions, an approach that leads to correct conclusions. But before I do that, I want to just mention to you that this video is for information purposes only. I am not a qualified investment advisor, and therefore everything that I share in this video should not be taken as investment advice. You are encouraged to consult a qualified investment advisor whenever you want to make investments. The other thing that I want you to make clear from the very beginning is that I will, in this video, be comparing the par issuing method, the par value method of issuing bonds, and the discount method of issuing bonds, solely based on the results in the December 2023 and the January 2024 auctions, and not any other auction. So the conclusions that we will draw from the two different bond issuing methods will be solely based on the auction results for December 2023 and January 2024. So let's get on with this. So the question that we are starting with is, if you had a fixed sum of money, let's say you had 100,000 kwacha in savings, and you decided that you want to invest the entire 100,000 kwacha in a government bond, which bond will give you the highest return between the January 2024 and the December 2023? If you got your 100,000 kwacha and invested in the bond for 2023, January 2023, and you got that same 100,000 kwacha, another 100,000 kwacha, and invested in the bond for January 2024, which of these bonds will give you the highest return in absolute figure terms? That's what we are seeking to answer in this video. So on the screen, I have We have a scenario where we have, let's assume you have 100,000 kwacha in savings. So that's what this column B represents. 100,000 kwacha in savings, and you want to put all of it in government bonds. So we'll try to compare if you did this and if you put your 100,000 kwacha in the December 2023 bond, and if you got 100,000 kwacha and you put it in the January 2024 bond, which one would give you the highest return? So if you look at column A, what I have are the different bond tenures. So we have a 2-year bond, 3-year bond, 5-year bond, 7, 10, and 15-year bonds. We'll do our calculations for all these bonds. So, and we're assuming that you have 100,000 kwacha in savings, which you want to all of it to put in a bond. Column C shows the discount price for the bonds for the auction that was done in December 2023. You can look this up. You can check. I'll have a link in the video, in the description section of this video, to the bond auction results for December 2023. So when you check, you find that the discount price for those bonds is as listed in column C. So the 2-year bond was at 86 kwacha 0.9187. A 3-year bond was being sold for every 100 kwacha, it was being sold at 75.8804. A 5-year bond, the discount price was 67.65. 7-year bond, it was 62.6284. A 10-year bond was 56.5202. And the 15-year bond, the discount price was 53.5864 kwacha. What this discount price basically means is that for every 100 kwacha that you got in face value, you were paying this discount price. Okay. When you look at column D, in column D, what I have is the par value price. We've been told that from January going forward, the bonds will be sold at par. So meaning that 100 kwacha will be sold at 100 kwacha. There is no discount. So that's how come for each of these 10 years of bonds, there is no discount. They are being sold at 100 kwacha. That's what column D represents. So now in column E, what I have is the face value. So if you had 100,000 kwacha and you wanted to put all of it in bonds and in a 2-year bond, and the discount price is 86.9187. It means your 100,000 kwacha will give you a bond face value of this amount. So all I'm doing is I am multiplying B5. So I'm getting your savings. I mean the amount that you want to invest, the 100,000 kwacha cash that you have, multiplying it by 100, which is a unit bond, and then dividing by C5, dividing by the unit, I mean the discount price. So 100,000 kwacha bond, when discounted, I'm sorry, if you have 100,000 kwacha and you want to put all of it in bonds, and the discount price for every 100 kwacha is 86, you will be able to get a bond of face value 115,050.04 kwacha. So what this means is you lend government 100,000 kwacha, they credit you with a bond of this value 115,050.04 kwacha at this price. If you invested 100,000 kwacha in a bond at this at 75 kwacha discount price, it will give you a face value of 131,000 kwacha, and so on and so forth. So for a 15-year bond, if you had 100,000 kwacha and you decided to lend all of it to government, it will give you a bond of face value 114.54. That's what this column represents. So if you notice, the face value is higher than the amount that you have because the bond is being sold at a discount. The next column, column F, if you notice, if you have 100,000 kwacha in savings and you want to sell a bond, you want to buy a bond, sorry, it will give you a bond face value of the same amount, irrespective of the tenure. So for December 2023, the bonds, if you had 100,000 kwacha, you were getting bonds at these amounts. Your face value was these amounts, which was higher than the amount that you put in. But for January, you basically, because it's being sold at par, whatever you put in is the same amount as face value. I hope we are together up to this. But maybe before I continue, I want to just put it across that previously bonds, typically like in December, bonds would be, the face value would be in multiples, I think, of 100,000 kwacha, of 100 of 1,000 kwacha. So you would typically not have a face value amount with these ingwes. But I think for our calculation purposes, that doesn't matter. So for now, what we can say with our calculation is that if you have 100,000 kwacha in cash or in savings and you want to put all of this in a government bond, in the December discount method, it will give you these higher amounts in terms of face value. You put in 100,000 kwacha in a 10-year bond, it will give you 176,927.82 face value. These are actual amounts based on the actual discount prices. For January, it's the same amount that you put in is what you are getting in terms of face value. Now let's move to column G. So column G is the coupon rate. So the 2-year bond, the coupon rate was 9%, 3-year bond 10%, 11, 12, 13, 14%, and so on and so forth. So this coupon rate is the interest rate per year. Okay? For January, column H, for January 2024, the coupon rates, if you've noticed, they have increased. So it has moved from 9% to 17%. This has moved from 10% to 20%, and so on and so forth. So these are the coupon rates for the January auction, and these are the coupon rates for the December auction. So now let's calculate the total coupons based on this rate. So so in December, if you put in 100,000 kwacha in a 2-year bond and it gave you a face value of 115, what is the total coupon that you will get from this investment over the 2 years? So the way you do this, you calculate this is by, you multiply 9, so you basically get 9%. You get 9% of the face value multiplied by 2 years, right? 9% of the face value multiplied by 2 years. We will calculate, we'll do it in such a way that we even remove the taxes and the administrative fees. So there is 16%, there's 15% withholding tax that is removed from your coupons, and there is 1% BOS administrative fees. So meaning that if you want to get your net coupons, you need to get 0.84. You need to get 84% of your net coupons. So it is giving us 17,000 for a 2-year bond. It is giving us 17,395.57. So from your 100,000 kwacha, if you invest in a 2-year government bond in December 2023 at a discount price of 86 kwacha, it will give you a bond of face value 115,000, this amount here. And at interest rate of 9% for the duration of the bond, 2-year bond, you will get a coupon of 17,000 kwacha. Is that clear? So it's the same concept that applies even to these other bonds. So if you pick a 10-year bond, you invested the entire 100,000 kwacha, it will give you a face value at this discount price, 56, to give you a face value of 176. At 13% annual interest rate, you will get a total of 193,205.26 net of taxes and administrative fees. You have already removed the taxes and the administrative fees. This is the amount that you are guaranteed over the 10 years. Okay? For 15-year, it's the same calculation. So that's what column H represents. These are total coupons. They will be paid in install every 6 months. So you need to divide this so that you are getting a chunk every 6 months. But the total that you will get throughout this period is what is represented here. Let's move to the total coupons for January. The calculation is basically the same. So when calculating here, you get your 17% multiplied by the face value, which is this face value, multiplied by the tenure, and we get 84% of it so that we remove the taxes. Okay, that is the amount that you get, 28,560. We can drag this formula here. These are the total coupons that you get for January. So for a 3-year bond, your total coupons net of taxes will be 50,400. For a 5-year bond, it will be 92,400, and so on and so forth. So that's what column J represents. Let's move to column K. So column K, now we are adding. So we're trying to find what you will get, your total fixed income you will get from this bond. So we are basically just adding your total coupons plus the face value. So in this particular case, we just add your face value that will be given at maturity and your coupons, the total coupons which you'll be getting in 6 months, but the total is what column I represents. And that's what gives us 132,445.61. I can drag this formula here This shows that for a 2-year bond, if you invested 100,000 kwacha, after 2 years, the total of face value and the coupons that you will get is 132,000. For a 3-year bond, it will be 164,996.49. For a 5-year bond, you put in 100,000 kwacha, the total you will get is 216. The amount has almost like doubled. For a 7-year bond, you will get 272,336. For a 10-year bond, you will get 370,133.16. For a 15-year bond, you'll get 515,802 in the December auction. For the January auction, again, it's the same concept. You just add your face value and your total coupons. It will give you these amounts. Now, I want you to compare these two columns. Column K, that represents your total, what is essentially your total portfolio if you invested in a December bond, 100,000 kwacha, and column L, if you invested 100,000 kwacha in a January bond. You will see consistently for all tenures that you are getting more in the discount method than you are getting in the par method. So, what are we able to draw from this? It is wrong for people to say, and I've seen at least one person online say that the January auction method is bigger and better. Bigger and better in what ways? Because when you compare these two, clearly, at least based on, again, the results, the actual results of the coupon rates and the discount rates, when you compare with December 2023, when you compare January with December 2023, clearly for the same cost, for the same amount that you invest in, from the perspective of the cost, the cash that you have, the money that is deducted from your bank account, you are getting more in the December method and the December discounts and the December coupon rates than you are getting in the January coupon rates. So it is not correct, to come to a conclusion that January gives you bigger and better returns. I think that when you look at it in real world practical, at least from the perspective of the hardcore figures, the absolute figures that you get in these two bonds, you are getting more in the December auction than you are getting in the January auction, and you can see from this calculation. Does this mean that government bonds have stopped being a viable investment option for you and me? You can come up to that conclusion. I personally still think that the rates that are being offered in the par method are reasonable enough, are relatively higher compared to other investment options. The bonds, I personally think that it still remains a viable investment option, even though the returns have dropped when you look at the January auction. So you are allowed to say that, yes, I recognize that the January auction has reduced in terms of the total earnings that we will be getting. When you compare to December, the January auction is a step down in terms of the total earnings that you'll be getting. However, I still believe that the bond investment, the government bond investment still remain a viable option. You are allowed to make to say that. What I think that is not, what I find in not genuine is to sort of proclaim that somehow the PAR method is better than the discount method. I've not been able to see that from the figures and from the calculations that you have just seen. The December method is far superior in this regard. Okay, for a 2-year bond from 100,000 kwacha, you're getting 132. In the other one, you're getting 128. For a 3-year bond, you're talking about 164 against 150. For a 5-year bond, you're talking about 216 against 192. 7-year bond, 272 against 235. 10-year bond, 370 against 309. 15-year bond, 515 against 433. There is a big difference. You are getting more in the December bond than you are getting in the January bond if you put in the same amount in these two bonds. I think that needs to be very clear, and let us not mislead people. And so that's what I had to share with you. As you can hear from my voice, I'm very passionate about this because I think some of the analysis that I was seeing left much to be desired. So what am I saying? From the two results that you've gotten, if we compare January and December, January is giving you more. Sorry, December is giving you more than January. By that, I'm not necessarily saying that bonds have stopped being attractive. When you compare to the other investment options that are available, they will still remain attractive to certain people. Certainly, they will still remain attractive to me. And you know what? An investment is attractive to you for various reasons. It depends on your financial goals. It depends on the kind of risks that that are very peculiar to you and your current financial situations. So this does not in any way mean that people should abandon investing in bonds. I think that they still remain a viable investment option for a number of people, for a lot of people actually. But I think it is wrong to say that somehow the new method is better than the old method. At least when you look at the bond result statistics from December 2023, 2024, the mathematics does not support such a conclusion. The conclusion that the mathematics supports is that the December method yielded better returns overall. When you look at face value plus total coupons, you will get more in December than you will get in January for the same cost. And so that's what I had to share with you, a pragmatic and practical comparison between the December 2023 and January 2024 GRZ bond auctions. I wish the experts, were able to share this comparison from this perspective. I've not been able to see any. Let me know in your comments what you think about my analysis. If you have any questions, drop them in the comment section. I should be able to respond to you. From me, it's a pleasant morning, and see you in the next episode.